Welcome to the Riskwiser Zone, the podcast where we dive into the world of stocks and finance to help you make informed decisions about your investments. I'm your host, Lewis, and I'm excited to have you join us today. We're coming off a wild week in the markets, with the S&P 500 reaching record highs before pulling back slightly on Friday. The Dow also declined, while the Nasdaq took a hit, falling 1.2% as tech stocks struggled. Let's take a closer look at what happened. Dell Technologies was one of the biggest losers on Friday, with its stock plummeting 8.9% despite beating second quarter estimates. The problem was that the company's guidance for third quarter earnings per share came in below consensus estimates, which spooked investors. Another stock that took a hit was Ulta Beauty, which dropped 7.1% after reporting stronger than expected sales and profits for the second quarter. It seems that investors were worried about potential tariff impacts, which could affect the company's bottom line. On the other hand, Autodesk was one of the top performers on Friday, with its stock soaring 9.1% after the company topped second quarter sales and adjusted profit estimates. The engineering and design software provider is seeing strong demand for its products, particularly in the area of AI data centers. We also saw some interesting movements in the tech sector, with Oracle and Supermicro Computer slipping lower despite their exposure to the growing field of artificial intelligence. It just goes to show that even with a hot trend like AI, investors need to be careful and do their research before making any investment decisions. As we head into the holiday weekend, it's worth taking a step back and looking at the bigger picture. The markets are still near record highs, and there are plenty of reasons to be optimistic about the future. But as always, there are also risks and uncertainties that investors need to be aware of. We'll be right back with more from the world of stocks and finance on the Riskwiser Zone. Welcome back to the Riskwiser Zone. We're glad you're still with us as we dive into the latest developments in the world of technology and finance. Today, we're taking a closer look at the chip stocks that have been making headlines recently. It seems like just yesterday, Nvidia and Broadcom were leading the charge in the tech sector, with their innovative solutions and strong quarterly results. However, on Friday, these same companies found themselves at the forefront of a decline in chip stocks due to concerns over China's sales and potential regulatory hurdles. Nvidia's shares took a hit, losing over 3% amid uncertainty about its China sales after it reported quarterly results earlier in the week. Broadcom, which is set to report its own earnings next week, saw its stock fall by almost 4%. Advanced Micro Devices and other chip stocks also felt the pinch, with the PHLX semiconductor index down roughly 3%. But what's behind this sudden downturn? Well, it appears that concerns over U.S. restrictions on chip sales to China have come back into play. The Trump administration announced that it's eliminating a Biden-era loophole that allowed Samsung and SK Hynix subsidiaries in China to import American chip-making equipment and software without a license. This move could make it more difficult for these companies to upgrade their plants, which in turn could affect supply chains for other chip firms that rely on their manufacturing services. Meanwhile, Alibaba Group's cloud computing unit has reportedly developed a new chip that could help fill the void left by Nvidia's H20 AI chip, which has yet to resume sales in China. This development has sent Alibaba's shares surging 13%. It's worth noting that despite this decline, August has been a strong month for most chipmakers, with the PHLX semiconductor index set to post gains on optimism about AI-driven growth. However, as we've seen time and time again, the tech sector can be unpredictable, and investors need to stay vigilant. As we move forward, it will be interesting to see how these companies navigate the complex regulatory landscape and adapt to changing market conditions. Will they be able to overcome these challenges and continue to drive innovation in the tech sector? Only time will tell. Stay tuned for our final story of the day, right here on the Riskwiser Zone. Welcome back to the Riskwiser Zone. We've had a fantastic show so far, exploring the intricacies of the market and discussing various investment strategies. Now, as we wrap up today's episode, let's take a look at some of the notable stories that caught our attention. We've seen a flurry of activity in the tech sector, with several companies releasing their quarterly earnings reports. Ambarella, a fabless semiconductor developer, reported a nearly 50% year-over-year revenue gain, sending its stock soaring 17% higher. The company's focus on edge computing and artificial intelligence solutions seems to be paying off, with over 36 million edge AI processors shipped so far. Meanwhile, Petco Health and Wellness had a solid quarter, with a beat-and-raise performance that saw the company flip to a net profit of almost $14 million, or 0.05 per share. The pet retailer also raised its guidance for non-GAAP EBITDA for the full year, citing improved retail operating fundamentals. We also saw significant gains for other companies, including Affirm Holdings and CrowdStrike, which reported strong earnings growth. However, it's essential to remember that past performance is not a guarantee of future success, and investors should always do their due diligence before making any investment decisions. As we analyze these stories, it's crucial to consider the broader market trends and economic indicators. The current market landscape is complex, with inflation concerns, interest rate fluctuations, and geopolitical tensions all playing a role in shaping investor sentiment. In conclusion, today's stories highlight the importance of staying informed and adapting to changing market conditions. As investors, we must remain vigilant, assessing both the opportunities and risks associated with various assets and sectors. That's all for today's Riskwiser Zone. Remember to like, share, and subscribe, and until next time, invest with caution.